Hello, everyone, and thank you for joining us for First Time Homebuyer. My name is Sarah Short, and I'm the Financial Education Specialist with Mid-Hudson Valley Federal Credit Union. Today, this webinar will be presented by Denise Quinn. She's an MHV mortgage expert, if you will, and she's put together this presentation to share a little bit about first-time home buying with you all. So without further ado, Denise, I'll let you take over.
Hello, everyone. Thank you for joining our webinar today. I've been with the credit union for 11 years now. I've been in the mortgage business for over 27. It's hard to believe. I started back in the day when we had handwritten applications. So anyway, we're going to start the presentation. I'm going to talk about the path to home ownership. We're going to tell you how you can figure out how much you can afford, the importance of your credit score and your credit report, application criteria, different types of mortgages, what mortgage loans consist of, home buyer programs, and the best part, when you search for a house.
I do just want to add briefly, if anyone has any questions, feel free to ask them along the way. We will be monitoring the question box there that you can type in questions. If we do miss any, we will leave time at the end of the presentation to go over all the questions that are submitted.
Yes. So feel free to type in any questions that you may have, as Sarah had just said. So buying your first home, it is the biggest purchase you'll make in your life. So it's exciting and scary all at the same time. And shopping for your house can sometimes be fun, and sometimes, depending on the market you're in, can be stressful also. So it's the biggest financial decision you'll make in your life, and you should take time to review the process, what you want, and where your financial needs are. When we calculate what we can afford, we take into consideration different things. For example, how much money you have for a down payment, the closing costs, the funds you need after you close, like to move into the new house. And if there's some things that you want to do on the new house, you need to take those into consideration. And sometimes if you wait and you want to do the things in the new house and you're going to stay where you are renting, you need that money also. Plus you need property taxes a full year when you are purchasing a house. But we'll get into that in more detail further into the presentation. Okay. So your credit is a very important part of buying a house. You should get a copy of your credit report. You should actually check your credit every year. You're allowed to for free. The federal government set up a credit reporting spot for you that you can go to. It's called annualcreditreport.com. It's a free site that the federal government had all three of the credit reporting agencies set up. So you can go in there and check each of the credit reporting agencies to make sure your credit report is correct. And if there's anything that isn't correct, you can dispute it right online through that website. And it's very important to do it because sometimes there are things that people do not know about that are on their credit. And this way, if you do it on a yearly basis, you stay on top of it. Credit and home buying. Most mortgage programs have credit score requirements. And with the market we're in right now, most of those credit score requirements have actually, the credit scores have gone up. They were lower last year than they are right now because of everything that's going on with the virus. And lenders look at your credit score to determine the risk in lending you money. The higher your score is, the lower the risk you are. And we pull all three credit bureaus when we do a mortgage credit report, and we go by the middle score. So say one score is 750, another one 680, and the other one is 630, we would go by the 680. And that is standard in the mortgage industry. Your credit score is made up of different components. The biggest is, your payment. Your payment history is very, very important. And the amount that you owe is very important also. So what they look at is when you have revolving credit, like credit cards or lines of credit, you want to keep those balances to maximize your score. You want to keep those balances below 30% of whatever the limit is on those cards. It's also very important to pay your debt on time. If you have a late payment, especially if it's close to when your credit report is pulled, it has a big impact on your credit score. When you get new credit, that brings your score down for a short period of time. And you also want to have a mix of credit. So you want to have credit cards and you want to have installment loans. Because when you have a mix, it helps bring your score up higher. So as I had said about having a better score, you want to keep your debt down. So if you keep your debt on your revolving cards below 30% of whatever the limit is, that helps bring your score up. Paying everything on time, avoiding balance transfers to new cards, keep old accounts open. If you close accounts, that is a negative to your credit score. And again, check your credit report on annualcreditreport.com. When you are applying for a mortgage, the following are considered. When we review your loan application, your credit score. Your credit score has a big impact on your closing costs, how much your PMI costs for your mortgage payment, and also your homeowner's insurance. When you contact your insurance company, your credit score affects what your homeowner's insurance rate is. We also look at the down payment, your employment history, what your income is. So they need to see a 2-year history of employment. And you can't have more than 3 jobs in the last 2 years. The other thing is your debt to income ratio. So what your income is in comparison to what your monthly debts are. These are all very important factors in calculating what you qualify for a mortgage. I also tell first-time home buyers a lot to think about what it is they feel that they can afford for a mortgage payment. So say you think you can afford $1,500 and right now your rent's $1,000. I encourage them to put that extra $500 in a savings account every month and not touch it, to see what it feels like to actually be responsible for that $1,500 a month payment. So before you go to look for a house, you have to get a pre-approval. The pre-approvals are typically valid for 60 to 90 days. You really want to make sure you pay all your debts on time at that time. Don't charge anything up, because if something changes from when your pre-approval is done to when you find a house, it could impact your pre-approval. So the mortgage process, after you get your pre-approval and you find your house, then you're gonna do your actual mortgage application. Your mortgage application that is when you have your house, your accepted offer, and we put in your actual application, where at that time, we will need 1 month of pay stubs, 2 years of W-2s, and your last 2 months of bank statements. This is also when you can lock into your interest rate. So from application until about 2 weeks before you close, you can lock into your interest rate at any time. Once you lock into your interest rate, that interest rate is good for 60 days. So you have 60 days to close on your mortgage application. So we take your application and your rate and your APR and all the closing costs, all of that's disclosed to you. And then your loan goes to a processor, where the processor orders the appraisal and gathers some more information. And then it goes to the underwriter, where the underwriter reviews all your information. The underwriter may have questions about some of the information and may come back with additional documentation that they want from you. After they get that information from you and everything's cleared, your file is set up for closing. Once it's set up for closing, we actually have to go back right before you close and contact your employer to verify that you're still employed, and we have to do a credit update. So during this process, it's very important to make sure you continue to pay everything on time and not to charge things up. When your closing is scheduled with your attorney and our attorney and the seller's attorney, you will go to the closing, and that's when you have to bring the additional money that you need for the transaction. And your attorney will let you know a few days before your closing exactly how much you need to bring. So there's a few different types of mortgage products out there, especially for first-time home buyers. There is a fixed rate mortgage. There's an adjustable rate mortgage, which really is not good for first-time home buyers. There are VA loans, FHA loans, and then there's also SONYMA loans, which isn't on our little slide, but SONYMA is the state of New York mortgage agency, and that is a first-time home buyer loan that the state offers to first-time home buyers. So what your mortgage payment consists of is principal, interest, taxes, insurance, which is homeowner's insurance, and then mortgage insurance. So your principal and interest payment on a fixed rate mortgage, that never changes. Your taxes and your homeowner's insurance, those typically do change. So that does impact your mortgage payment typically once a year. There's an escrow analysis done where we then send out what your new payment is. Also, mortgage insurance, you'll have that, you have to pay that unless you put 20% down when you purchase a house. On most mortgages, mortgage insurance goes away once you have a 20% equity in your home. The only loan that does not go away with is an FHA loan. FHA, if you put less than 10% down when you buy your house, you have to pay PMI for the life of the loan. So the home buyer programs that we're going to go over is the SONYMA loan with the down payment assistance. Then there's a grant called the Home Buyer's Dream. And we're also going to go over Fannie Mae Home Ready, SONYMA's Neighborhood Revitalization Program, Fannie Mae 3% Down Program, and our own first-time home buyer loan, which is our helper loan. So the SONYMA DPAL, what it is, it's SONYMA offers a down payment assistance loan, which helps you with the 3% down payment that they require on their loans for a 1 or a 2 family house. So what a DPAL is that depending on what your income limit will depend on what the interest rate is that you qualify with SONYMA. And they slightly increase the rate to offer you the 3% down. Over 10 years, you do not have to pay any of the down payment assistance loan back. And this program is exclusive to first-time home buyers. So SONYMA has something that's called the Achieving the Dream loan and the first-time home buyer loan, the low interest rate loan. So depending on what your income is will depend on which program you qualify for. I'll give you an example. For Orange and Dutchess County, the Achieving the Dream income limit for a 1 to 2 family household is $92,730. For 3 or more people, it's $108,190. And then the low interest rate loan, which is actually the higher interest rate. The 1 to 2 person household, the income limit is $115,920, and the 3 to 4 person household is $135,245. So Home Buyer's Dream is a grant that is offered through the First Home Loan Bank, and the program has changed. It actually changed last year, where they now offer $14,500 towards your down payment and your closing costs on your first house. There are income limits for this program. It can be combined with the SONYMA loan and the DPAL. This program is on a first come, first served basis, and you actually have to apply for it. You actually have to have your offer accepted. Your application has to be in, and we actually have to send the fully executed contract of sale and the appraisal to apply for this program. It comes out once a year, and the money does go very quickly. So Fannie Mae, which is a conventional loan, they offer something for first-time home buyers, which is called a Home Ready loan. Actually, you don't have to be a first-time home buyer for the Home Ready. You just have to qualify for the income, because there is an income limit for this program. The program allows for you to just put 3% down, and you can have a non-occupying co-borrower for this program if you put 5% down. So if you don't qualify for the house on your own, you could have one of your relatives go as a non-occupying co-borrower to help you qualify for the payment, but you have to put 5% down for that to work. And the income limit for Orange and Dutchess County for this program is $74,320. So the SONYMA Revitalization Program. This is a program for vacant homes. SONYMA was looking to get rid of the zombie properties that were in New York State. So they offer a grant for $20,000 to fix up a home that's vacant. That $20,000 has to go towards repairs. It cannot go towards your down payment or your closing costs. It can be combined with the down payment assistance loan and the Home Buyer Dream program. The $20,000 is forgiven over 10 years. So each year, 1/10 of the $20,000, so $2,000, comes off of the grant. So if you stay in the house for 10 years, you don't have to pay anything back. If you stay in the house for 5 years, you would have to pay $10,000 back to them. And there is an income limit for this, but it is higher, and you don't have to be a first-time home buyer for the neighborhood revitalization program. The income limit for Orange and Dutchess County is around $150,000. SONYMA has another 3% down program that allows you to put 3% down, and there are no income restrictions. However, one of the buyers on the loan application has to be a first-time home buyer. but they don't have to be under the 74,000. So finding a home, this is where we're going to turn it over to two of the realtors that we have on our webinar today.
Yes, so we are joined today by two fantastic realtors. First up, we're going to be hearing from Catherine DeClercq. She is an associate broker with Better Homes and Gardens Rand Realty out of their Goshen office. She's been a licensed broker for 21 years and serves all of Orange County. She specializes in the residential segment of the market and has enjoyed working with first-time home buyers throughout her career. Following Catherine, we'll be hearing from Pedro Garcia of Carassi Realty, Inc. He's been serving Orange, Ulster, and Sullivan counties and beyond as a full-time agent for just over 18 years. And he is also licensed in Pennsylvania. So Catherine, whenever you're ready.
Thank you, Sarah. Thank you, Denise. Thanks for having me. As Denise said, this can be a very stressful time. And I think one piece of managing your stress is finding the right agent. So how do you do that? If you Google, how do I select a real estate agent? You'll find lots of different articles that talk about it. And they basically come down to a few key points that I want to mention to you today. The first thing is make sure that the agent that you select has good communication skills. And by that, I mean not just being able to speak and converse with you, but someone who's really able to listen. Somebody who's going to hear what your needs are and be able to help you find the home and the process that meets your needs. The communication needs to be in the type and fashion that you need. So if you work during the day, it's difficult for you to take phone calls. Would that agent be able to text you, email you, get in touch with you the way you want to be communicated with? So when you are looking for agents, pay good attention to their communication skills and the style and see if they ask you about how you want to be communicated with, because that would be important in your selection. There's nothing worse than telling somebody, please don't call me during the day, and they just keep calling you during the day, and you're trying to find out what it was that they wanted. Did a new home come on the market? And you're left sort of hanging. So you want to be sure that they communicate in the way that you want. The agent should have a reliable experience. Myself and Pedro, we've obviously been in the business a long time, and picking an experienced agent is important. But when you ask about an agent's experience, not only do you want to know, how long they've been in the business, but how do they work? Are they a full-time agent? Do they have the time to dedicate to you? First-time homebuyers do require a lot more attention than someone who's been through the process before, because you need to know what to expect, how it's going to go. You might have the same question 3, 4, 5, 6 times. That's not unusual at all. You want to be sure you have someone who has the time to give to you. So ask them, how many homes did they sell last year? And if they've been in the business 20 years, but they sell 1 home a year, are they on the ball? Are they up on all of the market information that you need? Or are you better off with having an agent who's been in the market, 4 or 5 years, but they sell 20 or 30 homes and they're super active? So ask about that. Look for reviews and testimonials. Or referrals. And even those could be from friends and people who've worked with that agent. So that's a good place to start. Your lender could give you a referral to an agent that they've worked with, or someone that has worked with them. But keep in mind this, there's lots of different personality types, and somebody that might be right, say for your sister or brother that they worked with, maybe is not the right person for you. So you definitely want to interview a couple of different people and find out if they're a match for your personality type. And again, start with some referrals, read reviews, find out what other people have said about what it was like to work with them. Go with your gut, because your gut instinct is most likely right. If it feels like the right fit, it probably is. When you are looking them up, check their websites. See what kind of social media they have, what kind of information they provide on their website. They may be able to give you some idea about their experience through that. There's a couple of common myths that people have about selecting a real estate agent. The first one is that all agents are the same. Well, that's definitely not true. So don't assume everybody is the same. We all had to get the same type of license, either a sales license or a broker's license, but that does not translate into their experience and their attention to detail. Contacting the listing agent because they know the property best is also a myth that people have, that that's the best person to work with. When you hire your own agent, you can select one. You generally do not pay for the real estate agent as a buyer. 99.9% of the times, their services are free to you. The only time that might not be the case would be if they were helping you find a for sale by owner or something like that, something very uncommon. But you don't pay for their services. So when you contact the listing agents, they work for the seller. They don't represent your interests. We have something called fiduciary duties that say that we're obligated to represent your interests above everyone else. But when you call the seller's agent, they're working for the seller. So they're not working in your best interest. And the other myth is that you save money when you go to the listing agent. That's not the case either. The sellers have committed to what the brokerage fee is, so you don't save anything by going with the seller's agent. And again, you might actually not do well for yourself because they are working for the seller's best interest. So there's just a couple of things that I wanted to mention about selecting the agent. The agent's the person that's going to be with you from the very beginning of the transaction when you first start looking for a home, and they're going to be seated with you at the closing table most likely. So they're the constant that's there. You need somebody who knows that process well, because at any point in time there could be pitfalls that happen. I know Pedro's going to talk to you a little bit about putting those offers together and the rest of the process. And someone who has that experience will help you avoid costly mistakes or things that cost you time or things that cost you the home. So selecting the agent is really important. So interview a couple and trust your gut. Now, is there anything on the next slide before we go on to hand things over to Pedro?
Doing a wonderful job.
All right, so Pedro, you're up.
The fun part. Let's see, let me read this. All right, the fun part. Hi, I'm Pedro Garcia of Cross Realty. Hope everyone is doing well. So the fun part is looking for homes. I think one of the biggest things I come across with buyers, everyone wants a good deal. Everybody's looking for that foreclosure and looking for that good deal. But sometimes foreclosures aren't the best deal. The banks are trying to get the most of their money. So, as your first-time buyer, don't focus on foreclosures. Look at everything. The good thing with Mid-Hudson Valley, I do a lot with them. Knowledge is everything. They have a program for every house. So whether you're approved for one loan, they'll have a loan for a house that may need a kitchen. But basically, when it comes down to what do I offer, that's always the fun part of the matter. Right now we are in an aggressive market, so we don't have much room, but we have to make it as aggressive as possible. But do you know what you can afford? Basically, the second part, what you can afford, you already met those goals with Denise, and then us as agents, we try to find the most for what you're approved for, bedroom wise, keep the taxes at a minimum to make everything reach your criteria. The real estate listings online or enlist the help of your agent. Well, what we always try to do is set you up in our portal. So once we know where you're looking, what you can afford, we set you up in our portal that'll send automatic email. So if something goes on the market at 12, by 12:05, you should have it in your email. An agent should be on top of this. This is very important because if you don't have that full-time agent or that aggressive agent, you're going to miss out on a home that you possibly, may have loved. Again, I'm keep reiterating that we're in a very aggressive market. So your agent, like Catherine was saying, really has to be on top of things, and we try our best to do that. The questions you're going to ask: do I look on Zillow? Do I look on Realtor.com? That'll keep you entertained during the process, but we'll be more intact of sending you properties. You send us the properties, and we'll look them up for you to make sure that they are able to be purchased. And that pretty much, going through what I see here, sums things up for me. Denise?
So Catherine already spoke about the real estate agent and the importance of finding the right real estate agent for you.
I was going off the same thing.
Yeah. Okay, so when you find a house, as Pedro was saying, it's important, if you make a list of what it is that you would like in a house, but you also have to remember what your budget is. So you can't, if you only qualify for 150, you can't be looking for a 4-bedroom colonial, because that's not going to fit into your budget. But, make a list of the things that are really important to you and list them. What's the most important, and then the next, and the next. Don't you guys agree?
Yeah, Denise, in fact, one thing is if you're a couple and there's 2 people in the purchase, you should both do your list separately too, because something might be more important to one person than the other. So make your own individual list of the things that you think are the most important, and your spouse or significant other do the same, and then come back together, because most of us aren't able to get every single thing that we want. And we have to make some trade-offs, especially for first-time home buyers. In our mind, we'd love that home that has everything, but our financial resources may not be able to give it to us. So which things are we willing to give up? Are we willing to do a little more work to the home? Or if we're not willing to do work to the home, are we willing to take something a little bit smaller that's in pristine shape? So some things that you might have to consider. And sometimes you don't know it until you see it. But again, like Denise was saying, if you make that list in the order of the most important to the least important, and your spouse or significant other does the same thing, it's a good exercise, because you may find out somebody's most important thing might be the kitchen, somebody else's might be the garage, and well, you were willing to drop the garage if you couldn't have it, and nobody's really given up the kitchen, but maybe they're willing to do 3 bedrooms instead of 4 bedrooms. So you need to make those lists probably separately and then compare.
Correct. So do you want to talk about contingencies in offers?
Can we do that?
Sure.
I'm happy to do that. Okay. So when you find your home, there's going to be several things that have to happen before you're actually going to move forward and purchase that home. So one of them is a home inspection. So you find a home, you think it's right, you work with your agent, you come up with an appropriate price to offer, your offer gets accepted. That offer is contingent upon a home inspection. So you will hire a licensed home inspector to inspect the home, and will tell you the condition of it, if it has, let's say, things like termites, or the roof needs to be replaced, or the electrical's not up to code. That would be something that the home inspector would find, and then you can determine if you want to move forward now that you know those things that maybe you were unaware of when you made your offer, or those might be something that is negotiated with the seller for repair or credit. Home inspection, though, is no guarantee that the seller is going to change their price, but you can always ask. So that's one way that you can get out of this transaction. You make the offer and you say, hey, it's not what we thought it was. That you can use that contingency and you walk away. At this point, you've not put any money into the transaction except for the actual cost of the home inspection, which can, depending on what type of inspections are needed, whether it has municipal water or sewer, or if it needs a well and septic test, it could be somewhere in the $700, $800 in the cost of the inspection. So you want to be sure you want the home before you spend that money on it. But sometimes you will find out in an inspection that the house isn't what you had hoped, and that was good money spent to make sure you didn't make a mistake. So at that point, then the other contingencies that might be in there are, for one, the approval of your financing, you actually getting your mortgage. An appraisal, the bank is going to send out an appraiser to make sure the home is worth the amount that's being paid for it and loaned on it. So that would be another contingency. So again, if you don't get your mortgage, if it doesn't appraise, if those are contingencies in the offer, then you can get out of that transaction. It gets, and that's called a mortgage contingency as well. You have to make a good faith effort to apply for that mortgage. Now, the sale of a previous home, if you currently own a home and you want to purchase another one, as Pedro said, it's a really aggressive market. So most sellers don't want to go into a transaction with somebody who has to sell another home before they're able to move forward. So wherever possible, you should try to get that home sold first before you even venture into this, because it would make your offer much less attractive than someone else who doesn't have something to sell. Because what if your house never does sell? They've taken their house off the market waiting for you, lost other buyers, lost selling time. So in a hot market, an aggressive market, you want to limit any kind of contingencies like that. So get that other home sold first. I know that that can be a hassle for people because they'd have to move twice and go into a rental, but it does put you in a much stronger negotiating position. You're able to negotiate the best possible price on the sale of your home, and then you're able to negotiate a good price too on the house that you're going to purchase. Because in most cases, if you're showing up to a purchase and you've got this contingency dragging along and having to sell a home, you're most likely going to have to really offer that seller an incentive monetarily for them to want to wait for you. So it's best to get it sold first so that that's not even an issue. So after you do your home inspection, that's when the attorneys draft the contracts and you put that down payment down that Denise talked about, and that money's held in escrow, and that's part of your down payment for the closing. But you have to put that down at the time that you sign the contracts. When you sign the contract, you're beyond the home inspection, that's already done, and you just have your mortgage contingency and that appraisal outstanding to do.
Okay, so what an offer consists of. Pedro, can you talk about that?
Pretty much comes off of everything that she said. Basically, the purchase price, the closing day, and how long the offer is good for, are questions that are, you're always going to have. The offer you make, basically, again, we keep mentioning the word, we have to be aggressive. If they're asking 190, we as realtors are always going to try to get something knocked off. But, we try to make it, again, aggressive as possible. The closing date, it pretty much, it's up to you, the buyer, but again, the contingencies of the seller can determine that as well. So that's pretty much a double-edged sword. As if you want to go in and close in 20 days, the seller may say, we need 30 to move out. Your offer is as good for as you want it to be. You can give the seller, 24 hours to get back to you, or, they can get back to you in a few days. Again, that's usually the case that's happening right now because of the market being so aggressive. Unfortunately, these sellers are saying, we want to wait a couple days and to see what happens. But, selecting the right agent, we try to push things along quicker so that they benefit you as well. And, for a quicker response. And those, that's pretty much the three the components. And again, the closing can be determined on your behalf as well. If you need a little bit more time, we can get the seller to work with you as well.
Okay, so the way the process works is you get approved, you get pre-approved, you get an offer accepted, you do your home inspection. Once the home inspection's okay, you finalize your mortgage application and you get it submitted. While your mortgage is being processed, you're going to get a quote for homeowners insurance. When your loan is cleared and you're ready to close, you're going to do your final walk through the house right before your closing. And your closing consists of, you're going to sign a note and a mortgage and your closing disclosure. Your closing disclosure is going to be the final list of all the fees that you incur getting the mortgage. Your loan estimate you actually get in the beginning of your mortgage application. It is pretty much the same form. The federal government just gave it 2 different names. And that's about it. Thank you for coming to our webinar.
Okay, so one last suggestion, if everyone could head to our website and download your copy of our ebook, Your Journey to Homeownership. This is a really useful tool in purchasing a home. It will include all of the topics that we covered today, as well as details. So I know there was one question about whether or not these slides would be made available after the webinar. The webinar is recorded and that recording will be sent to you so you can listen to it again at your leisure. And like I said, all of the topics that we discussed today will be included in the ebook, Your Journey to Homeownership. So definitely head over to our website. The link is on the bottom there. Hover over the Learn tab, ebook library, and there's a ton of other ebooks there as well with great information. And finally, if you can all just, if you have any questions, type them in now. I know we have a few that I'm going to be reading in a moment. If you could also take a moment to take our brief survey so we can continue to improve. Your feedback is really important to us, and we want to make sure that these webinars are useful, educational, and worthwhile. So take a moment to jot down that link there, or if you have your cell phone handy, go ahead and take a photo of that QR code and the survey will pop up from there. It's just a few brief questions, and like I said, your feedback means so much to us, and we want to continue to improve. So let me just jump through a few questions. The first one that I have is, has the minimum credit score to purchase increased?
It has increased because of everything that is going on with the virus. For example, last year you could have gotten an FHA loan with a credit score in the 500s. Today you have to have a 660 credit score to get an FHA loan. Now SONYMA does not have a credit score requirement, so to say, but they have a credit guideline that they go by. So you cannot have any late payments in the last 18 months, and you must have at least 3 lines of credit that are in good standing. They do allow you to use alternate credit though. So if you pay rent, you have to either pay to a management company or you have to pay your landlord with a check. You could use that as an alternate credit reference, or you could use a utility bill, a cell phone bill, a cable bill. Any of those could be alternate credit references that SONYMA allows.
Great. So our next question is, why is an attorney required?
Do one of the realtors want to answer that?
Question.
Why is an attorney required?
Why is an attorney required?
I guess I'll take that. Attorneys are going to be looking out for your legal best interest. The like Denise said, real estate transaction is the largest purchase that most people make in their lifetime. So there's certain things that could happen in the course of that they're looking out for your best interest. So that contract is very involved, often has a lot of additional riders and things to protect your interests. So that's the piece that they do. What ends up at the end is you've got your own attorney, the seller has their own attorney, and the bank attorney is there as well. You have and we didn't even really talk about the title company. There's a title company that also plays a piece of the closing to make sure that there's clear title. So the last thing that you would ever want is to find out, like with a title issue, that you purchased a home, you thought you were purchasing it from the only seller that there was, and that turns out there was another seller and this was done without their knowledge, and they come back to claim the home from you. So the title company looks out for your interests there, and your attorney reviews all of that to protect you.
Great, thank you. Our next question is asking if the grant depends on one's income.
I'm not sure which grant you're talking about. Neither of the grants, the 20,000 grant, it doesn't depend on your income, but to qualify for getting that loan, you cannot exceed the income of $150,000 for the $20,000 grant towards the repairs of the house. It's just, I'm not sure which grant you're asking about, because there were a few that we spoke about. The other ones do have income limits that are lower.
Okay. Okay, next question is, what is the salary requirement for the DREAM program?
So it varies by county, and it also varies by the number of people in your household. So I don't really have those numbers, but if you email me how many people are in your household and where you're thinking of and where you live currently, I can let you know.
Okay, and the next question is, can you have a co-signer with the SONYMA neighborhood loan?
You cannot. You can have a co-signer for SONYMA for income. If you don't have the credit, enough lines of credit that they require, the 3, you can have a co-signer for credit only.
Okay, next question. How do you find a real estate agent, either word of mouth or Google for agents located near you? What is your recommendation on how to find the best agent for you?
I'll let one of the realtors take this.
Okay, I'll take that. I would look at a number of different sources. You can go to your lender and see if they can make a recommendation. Talk to people that you know that have worked with agents, see who they've used. You might start calling some of the agents who have listings in the area that you're interested in, or find out which brokerages have listings in there and contact those offices and find out. But a lot of it is online. When you're looking at listings, you may see agents, read their bios, read what their the website says about them, and find one that sounds like it's right for you. There's lots of agents also on social media, so you might see real estate agents who are friends of friends on Facebook or Instagram or places like that. And so you may come into contact with the same group of people, but it's important to ask them some questions about, like we said, you need a full-time agent. If they only work a couple of days a week in a hot market, you could lose the house because that person's not working on that particular day. And I always tell my buyers that, you're not competing with the seller for the home. You're not battling with them for it. You're actually competing with other buyers to get the home, especially in the first-time home buyer category. There's not a tremendous amount of inventory, but there are a lot more buyers. There's less buyers that can afford $1 million homes than there are buyers who can afford $150,000 or $200,000 homes, things like that. So there's more people competing with you. So you want to be sure you have somebody that's going to be, available and working. Like Pedro said, the portal is a great way. You shouldn't have to be hunting for the homes yourself. We should be sending them to you so you have them as soon as they come on the market. And at any point in time when you first start looking, it'll look like there's listings that are available, and they're really not. And Pedro mentioned that, like, they may not actually be available. They already have an offer on them. So it could be a little bit frustrating when you first start looking. that some of that inventory kind of looks like it's there, but it's not really there, you need an agent that's going to be able to send them to you as soon as they come on so that you can pounce. Because if it's a good looking listing, you're not going to be the only person showing up. So you got to get there first.
Great, thank you. Our next question is, what is considered a vacant home under the SONYMA revitalization loan?
So what's considered vacant is when the appraiser goes out there and there's nobody living in the house.
Okay. Next we have, does your rent payment factor into your DTI ratio?
It does not, because you will not have the rent payment when you buy the house. You'll be moving into the house and getting rid of rent.
Okay. Next question. There's a lot of great questions in here. Is there a certain amount of money you need to have in a bank account when looking to purchase a home? Also, if you're looking to move out of state, can a loan be taken out in New York?
So we only lend in New York State. There are other larger lenders, like, that do lend in other states besides New York State, but we only lend in New York. When you're going to buy a house, it's going to depend on how much you put down, what the taxes are on the house, because when you buy a house, you need, at least in New York State, you need a full year of taxes, because part of the taxes, part of the property taxes go back to the seller to reimburse them for the taxes that they've paid that you'll own the house. And the other part goes to set up your escrow account. And then you also need a year's worth of homeowner's insurance, and you need whatever the closing costs are for the house.
Okay. Does it lower your credit score to check your credit?
When you go on annualcreditreport.com, it does not. It's a free site that does not count as a hit. They do offer for you to buy your FICO, but I do not recommend for people to buy their scores, because for whatever loan you get, any loan you get, it has a different model for scoring your credit. So a car loan has its own model for scoring your credit, a mortgage has its own model, and a credit card has its own model. So your score would be different for all of those different loans.
Okay. Can you provide a brief description on a VA home loan?
So a VA home loan allows a veteran to buy a house with no money down. If they are a disabled veteran, they do not have to pay the funding fee. If they are not a disabled veteran, then there is a funding fee for your first purchase of 2.25% of the purchase price, and they add that into the loan. VA loans are great options for veterans, and SONYMA actually has a VA option also. It's called a SONYMA VA loan, where the down payment assistance they give to veterans for free instead of increasing the interest rate that they do, which is what they do for other borrowers.
Okay. Next we have, do you and your spouse both have to be on the mortgage, or can it just be one of you?
It can just be one of you. You could just have one person on the application and both on the deed, whichever you prefer.
Okay, great. Do you deal with people that have a GI Bill?
Well, that would be a VA loan, so yes.
Okay. When do the dream loans become available every year?
It is supposed to become available in May, but I'm not sure if that is what they are going to do because of everything that's going on right now.
Okay. Do you have to find your own attorney, or will the real estate agent find one for you?
Typically, realtors do refer attorneys to the buyers, and they also refer a couple home inspection companies.
Okay. Do you anticipate that we will have a buyer's or seller's market in the coming months?
Well, it's kind of hard to say, it's definitely been a seller's market, and it's still a seller's market. And I kind of think this area is going to be very busy once things open back up, because I think a lot of people are going to move out of the city to move up here, is my personal opinion. What do Catherine and Pedro think about that?
I agree 100%. Seller's market, unfortunately, inventory is very low. So, you know, for every house, there's, I don't even know these numbers. I want to say maybe 5 to 10 buyers for every house out there. So, you know, that's a big problem with us being, you know, having a low inventory right now.
I agree. I think I don't see it changing from a seller's market. There is low inventory, and I think we're going to see a lot of demand. People who might have been, you know, on the fence about maybe moving out of the city might right now decide, I don't want to be in such an urban, dense area after this. They might be in their homes and saying, I got to get out of this place, and that may be a reason to move. People may decide they don't want to be with the people they've been quarantined with all this time too. So there's lots of reasons that I think we're going to see a very busy market when this happens. It's kind of like what happened after 9/11. And, you know, as long as people can get mortgages, you know, and people haven't been out of work or, you know, and I know that's certainly a factor for some, that if you have lost your job during this, obviously that's going to affect your ability to get a mortgage. But I think that it's going to be as a lot of pent up demand. People who would have been out in March and April now are all just going to come out whenever the floodgates open.
Okay, so we are running low on time, so I'm going to try to cruise through these last few questions. How do you find a good attorney for home searching and buying, and how much approximately do they cost?
I'll let Pedro answer that.
That's a great question. You definitely want to find an attorney that focuses on real estate. You definitely don't want a criminal lawyer / real estate. You know, you definitely want to find someone that puts their time to real estate. They're more available. Right now, attorneys, I want to say here in upstate Orange County and the surrounding areas, I've been seeing anywhere between $1,000 and $1,200 for a transaction to review contracts, go over your title and everything. So I want to say about $1,000 to $1,200.
That would have been my guess too, just about there. And again, I think Pedro hit it right on the head. Get somebody who's a real estate attorney. You don't need or want a litigator, somebody out of Manhattan. This is local real estate. And when you end up with those other types of attorneys who don't specialize in this, they're not available to you to answer your questions. They're in court, things like that. I've seen that. And if you have things like a PBA attorney, because you're with law enforcement. There are local attorneys who will take the PBA voucher, so you can get the benefit of, the benefit of a PBA voucher, and yet use a local attorney as opposed to somebody maybe out in Long Island or someplace that you never get to talk to. But ask your real estate agent, because they'll have those connections for you.
Okay. Denise, can you talk a little bit about the MHV helper loan?
So the MHV helper loan is our own first-time homebuyer loan. It allows for a 3% down payment, and it's very similar to the SONYMA loan. So if you don't need the down payment assistance loan right now, our helper loan actually has a lower interest rate than the SONYMA loan does. So it would be a benefit to you to go with our first-time homebuyer loan over the SONYMA loan, because you would get a lower interest rate.
Okay, great. When you say you need the money for the year of taxes and insurance, can you roll that into your loan? I think the question is more, what cash do you need to have ready to purchase outside of the loan?
So it's really hard for me to say what cash you need, because it depends on how much the taxes are and how much the house is and what county you're buying in. So if people have scenarios for a house that they're thinking of, if you're doing a SONYMA loan, you could potentially get into a house with only about $7,000 out of your pocket, but you also need a seller's contribution. And a seller's contribution is the seller being willing to give 3% of whatever the purchase price is towards your closing costs at the closing.
Okay. At what point in the process do you find out how much your mortgage payment and property taxes and homeowner's insurance might be?
Well, you can get an estimate when you get pre-approved. I try to ask people, what do you feel comfortable with as a monthly payment, to make sure that they're not going to be overwhelmed. But you can, and once you find an actual house, then you can get an actual payment, because then we know what the purchase price is, we know what the taxes are, and we do estimate what the homeowner's insurance is, and that is something that the buyer does go to their insurance company and get, but it could possibly be, $10 off either way.
Okay. If you're on unemployment due to coronavirus, does it affect your employment stability?
So there would be an exception for being out of work right now because of corona, but you do have to be back to work to actually close to get the mortgage.
Okay. Do you need to have a real estate agent before your pre-approval?
No. Typically, agents won't take you out until you actually have a pre-approval.
Okay. I'm just going to do 2 more questions, and then beyond that, if there are any questions that people have submitted, I will reach out to you individually to supply those answers for you, because we are running a little over time here. So the attorney and the inspection cost is fixed in with the down payment, or is that separate?
That is separate. So you would pay your attorney when you go to meet them, and you would pay the home inspector when you meet them.
Okay. Okay, 2 final questions. 1, can you qualify for more than 1 loan, and can they all be used?
Well, you can qualify for different loans, but you can only get 1 loan when you're buying the house.
Okay. And how long does a pre-approval last for?
So the pre-approval, typically my pre-approvals I do for 60 days. And as long as nothing changes, we do update them without re-pulling your credit. But it's very important, to make sure you stay with paying everything on time, and that if there's any job changes or anything like that, you need to let us know.
Okay, great. There are a few questions about interest rates for SONYMA loans, or just interest rates in general.
So currently the interest rate on the lowest interest rate for a SONYMA loan is 3.5%. If you want the down payment assistance with that loan, the rate would go up to 3.875. And currently the interest rate, as I had said, on our 30-year fixed first-time homebuyer loan is 3.375.
Okay, great. So I think I hit most, if not all, of those questions. Thank you for submitting questions. There were a few questions about getting in touch with Denise. We will supply her contact information through the follow-up email that includes the recording of the webinar. And I think that's all that we have right now. If anyone has nothing else to add, then we just ask that you take the survey and have a great evening.
Thank you, everyone.
Thank you.
Take care.
Thank you. Good luck with your home search.